If you're a chiropractor, what's your most valuable asset? It's not the building, it's not the table, it's you. It's your hands, your back, your physical ability to do the work. That's the engine that drives your entire practice. But what happens if that engine suddenly breaks down? Let's get into how you can protect it. A lawyer can probably still argue a case with a broken arm, but for you, your income is directly tied to your physical well-being. An injury to your back, your shoulders, or your hands doesn't just slow you down, it can literally shut down your income, and that leaves both your practice and your patients in a really tough spot. So that brings up a pretty big question, right? You spend all day, every day, looking after the health of your patients. But what about your own financial health? Have you really built a fortress around your income to protect your family and your practice if an injury or an illness takes you out of the game? I think this is a great way to look at it. Your career is just like the spine itself. It's strong, it's complex, and it's absolutely essential to everything you do. But just like the spine, it has very specific points of vulnerability. And if one of those points gets compromised, well, the whole system is at risk. And that leads us right to the heart of the problem. You might think you're covered with standard disability insurance, but those plans often just weren't built for the unique demands of being a chiropractor. Let's dig into exactly where those plans can fall short. So here's what most people think. They assume disability insurance will replace about 65% of their income. That's the industry standard, the target. But for high-earning chiropractors, the reality is pretty different. Traditional plans often have payout caps, which can drop your actual income replacement down to as low as 30%. Just think about that. Could you run your life, your practice, your family on less than half of what you make now? That is a huge and often shocking financial gap. And it gets even trickier. Traditional insurance companies can be really conservative. They might deny you coverage not just for health conditions, but for your lifestyle. Love to go skiing on the weekends? That could be a red flag. Decided to scale back your hours to work part-time? That might disqualify you too. All of a sudden, that safety net you thought you had is filled with holes you never even saw coming. Okay, so how do you actually fix these vulnerabilities? The answer is in a specialized kind of safety net, a type of coverage that's literally designed to fill in the gaps that traditional insurance leaves wide open for professionals just like you. Now, what's really important to get here is that we're not talking about replacing your current disability insurance. Think of it more like an overlay. It's a special layer of coverage that sits right on top of your traditional plan, and its whole job is to fill that income gap and get your total protection back up to that 65, maybe even 75% target. So is this actually for you? Let's walk through a few very specific situations to see if this kind of specialized approach makes sense for your practice and your life. Let's just start with the biggest number on the page. This kind of plan can provide up to $250,000 per month. It's built specifically for professionals whose income has just plain outgrown what a standard insurance policy can cover. Now this is one of the biggest game changers. A lot of health conditions that make traditional insurers say no thank you can often be covered with a specialized plan. We're talking about major things like cancer, diabetes, and even back and spine issues. The exact things that are probably a top concern in your line of work. And think about this really practical scenario. Let's say a traditional insurance company puts your application on hold for 6 months because of some minor health thing. That's half a year you're completely unprotected. A specialized plan can step in as gap coverage, protecting you from day one so you're never left exposed while you're waiting. What about your life outside the clinic? If you love to scuba dive or rock climb or even train in MMA, a lot of traditional insurers look at that and see a dangerous risk. They might just deny you. Specialized plans are different. They're built to underwrite the whole person, hobbies and all, so you don't have to pick between your passions and your financial security. And what about how long you plan to work? So many chiropractors practice well into their 60s and 70s, but most traditional disability policies just stop offering new coverage around age 63. These specialized plans get it. They offer coverage options well into your 70s, protecting you when you're often at the absolute peak of your earning potential. All right, so up to this point, we focused on protecting your personal income. But a disability doesn't just impact you, right? It impacts your entire practice. Let's look at how this kind of coverage can also protect the business that you've worked so hard to build. First up, there's something called key person insurance. Just imagine if you or a vital partner in your practice suddenly couldn't work.
How would you pay for finding and training a top-notch replacement without draining the business's bank account? Well, this insurance gives you the money to manage that whole disruption, making sure the practice doesn't skip a beat. Now, for anyone in a partnership, listen up, because this is absolutely critical. A buy-sell agreement that's funded by disability insurance can prevent a total worst-case scenario. If one partner becomes permanently disabled, the others immediately have the cash to buy out their share of the business. This stops financial chaos in its tracks and makes sure there's a fair, clean transition for everybody.
And finally, let's talk about just keeping the lights on. If you're out of commission, the rent, the utilities, your staff's salaries, none of that stops. Business overhead expense coverage pays for all those fixed costs while you can't work. It's what keeps your practice alive and preserves its value, so there's actually a business for you to come back to. So when you put this all together, what's the bottom line here? It all comes down to one thing: recognizing the unique value and the unique vulnerability of your ability to do what you do. Think about it. You wouldn't use some generic tool for a really specific adjustment, so why would you use a generic financial plan to protect your most valuable asset? Your career is specialized. It absolutely demands specialized protection. So the question you really got to ask yourself is, does my current plan truly protect the hands that heal? All the information we've gone over in this explainer was based on materials from Peterson International Underwriters. Thanks so much for tuning in.